Hello, everyone. Welcome to another episode of Adam Live. Hope everyone is doing okay, safe, and appreciate you guys spending some time with me on this pre-Christmas Adam Live. I know you guys probably have other stuff more interesting to do, like Christmas shopping or hanging out with family and friends. So I appreciate you guys being with me for some time today. Of course, this is being taped, so don't worry if you got to leave early or you missed it. You can rewatch it anytime you want on our YouTube channel at IRA Financial. Again, I'm Adam Bergman, tax attorney, founder of IRA Financial, and I want to chat about the status of the Backdoor Roth IRA. I've done a lot of videos and podcasts and blogs, articles on the Build Back Better Act, the IRA provisions in the Build Back Better Act, and lately the Backdoor Roth IRA and the mega Backdoor Roth 401k, because those are really the two main provisions impacting retirement account holders that are still in this bill. Although you guys probably have heard the bill's kind of dead for now. So I guess let me start at status. So on Sunday, Senator Manchin of West Virginia basically said he's going to vote no on this bill. And by him voting no, that means the Democrats do not have enough vote in the Senate to get this bill passed and to the president for his signature. So that means it's essentially dead as of now. Doesn't mean it's not going to be resurrected in 2022. President Biden stated yesterday on December 21st that he plans to work with Senator Manchin, and he's very confident that some form of this Build Back Better bill will get passed. I was actually surprised. If you listen to some of my prior videos, I was 70% sure that this thing would get passed this year. I guess like President Biden, I didn't think Manchin had it in him to just say no. So I was wrong. Even though our lobbyists basically said it's not going to happen this year, I just believed, the Democratic caucus, President Biden was going to have enough sway to get Manchin to move on this bill. And it just doesn't seem like it's going to happen. He wants them to go back to the drawing board and kind of rewrite this thing. Obviously, he's concerned with inflation. He's worried about some of the gimmicks involved in the numbers that, hey, these are 4-year numbers, but we know this is really a 10-year bill, and they're just going to essentially renew a bunch of these provisions. So he was worried about runaway inflation and some other stuff. Either way, for retirement accounts, it's a good thing. Why? Because this bill has a number of, I believe, negative focused provisions on IRA. So let me just recap what happened from September 15th until this day, and then we can talk about the future. So on September 15th, the Ways and Means Committee in the House basically announced tax provisions as part of this future Build Back Better Act. Now, there were some really nasty provisions in there, which you've heard me talk about over the last couple months ad nausea. The two really bad ones that thankfully we got knocked out were no IRA investments for accredited investor investments. So no IRA was allowed to invest in private placements, private businesses, hedge funds, private equity, investment funds, anything that requires an accredited investor. That's removed. That's gone. And then the second is no IRA can invest in any entity they owned more than 10% of, even though the 49.75 threshold was 50% or more. So they were going to lower the 50% threshold to 10, plus they were going to force you to unwind those transactions within 2 years. And if you couldn't unwind it, you'd be subject to tax. So those provisions were kicked to the curb because not just Manchin, but a number of senators, including Senator Sinema of Arizona, had some major issues with those provisions. There was also a cap of $10 million on all retirement accounts, not just Roths. Plus, what that means, if you had income above a certain threshold, around $450,000, married, filed jointly, and you had more than $10 million in a retirement account, you had to take taxable distributions to get to that $10 million. So that means if you had $15 million, you have to take a $5 million distribution, generally over 2 years to get to $10 million, subject to tax, even if you had a Roth. So the really unfair part of that provision was that if you were 52 had a Roth, all after-tax money, because you're under 59.5, they were going to force you to take a taxable distribution of that Roth amount, even though you technically weren't required to take the distribution, but for that provision. That provision's been revamped, and now that provision won't kick in until 2028, and ultimately there's no 2-year look back. So you have the next 6 or so years to worry about that, and if you're over 10 million, you'll have to take distributions, but they will not be taxable if it's a Roth, even if you're under 59.5. So they played around that provision. That provision is in the current Senate version of the Build Back Better bill, even though it's dead. There's also a provision to extend statute of limitations for IRAs from 3 to 6 years. There's also a provision to treat an IRA owner as a disqualified person. Not a major thing, but essentially the only remaining provision that impacted all of us is the elimination of backdoor Roth IRAs. So irrespective of income levels, no one will be able to convert after tax to Roth. And then there's a prohibition on converting pre-tax to Roth starting in 2031. So up until last Sunday, that looked like it was going to be part of the Build Back Better bill. On Sunday, I actually was watching this on the treadmill. I was watching Fox, the Sunday morning Fox show, and Senator Manchin was interviewed. So I was actually jogging on the treadmill at home. I'm in Miami, and I usually like to run outside, but it was raining on Sunday morning, so I was watching TV and turned the show on by chance, and saw Senator Manchin speak, and I almost fell off the treadmill when he basically said, "No, I'm not voting for it." Read my lips, no. And I basically had to stop running and emailed a bunch of people in our industry. In fact, one of our lobbyists emailed us right away saying, "Here's a link to the Twitter account. This is what Senator Manchin said." So as of today, December 22nd, 2021, the Build Back Better bill is dead. Okay, so backdoor Roth IRAs, after tax, mega backdoor Roth 401ks are in game. You can still do that. Now, can you do them in 2022? We shall see, right? But in 2021, you can still do them. So you have another 10 or so days, do your backdoor Roth IRAs. So real briefly, assuming you haven't checked out my previous videos and blogs and articles, real quick, what's a backdoor Roth IRA? So essentially, if you make more than $208,000 in 2021, you can't do a Roth IRA. So in order to do a Roth IRA, you can do what's called a backdoor Roth. Now, starting in, actually, let me say before 2010, if you made more than $100,000, you were not able to do a conversion, a pre-tax or after-tax to Roth. So the backdoor Roth IRA was born in 2010. Financial crisis occurred. Treasury, IRS realized they needed money. So they encouraged people to do conversions. Why? Because you prematurely pay tax, which is a win for the government. And even though it's a loss for the government 20, 30, 40 years down the road, when people are able to pull out funds out of the Roth tax-free, they don't care what happens in 20 or 30 years. Governments are focused on today, budgets for the next 2 to 4 years. So conversions are really attractive. And that's why in the Build Back Better bill, they don't carve out or eliminate conversions pre-tax to Roth for 10 years. Why? Because they want that money to pay for the Build Back Better bill. They kicked it down the curve for 10 years. So they let the next, whoever the administration is at that time, deal with it. But we need the money now, even though we don't love conversions because we think rich people abuse it. We need the money, so let's stick it in there. But let's stick something in there that says we want to eliminate, because that from a policy perspective is what we really want, but we need the money, so can't really get what we want, but let's just stick the timeline in there so we can at least show that, hey, we really wanted this out of here. So as of today, if you make more than 208, you can't do a Roth. So you do a backdoor Roth IRA, which means you make an after-tax IRA contribution, and then you can immediately convert it to Roth, literally the next day, the next hour. Okay, so it's not tax deductible. The only thing to be aware of is something called a pro rata formula, which means if you have other pre-tax IRAs out there, you may not be able to do the full conversion. Okay, I've given this example many times. I'll give it again real quick. You have an IRA of $5,000 from 2017, sitting in cash, no returns, just to keep it simple. And 2021, you want to do a $5,000 backdoor Roth. you make too much, you make more than 208,000, married, filed jointly. So you can't do a Roth. So you're listening to my video, watching my video, listening to my podcast, and say, hey, let's do a backdoor Roth. So I do $5,000 in an after-tax IRA, and then I want to convert it to Roth. But I'm watching what Adam's saying, and Adam's saying there's a pro rata formula. The way the pro rata formula is you aggregate all your IRAs. So here's the $5,000 Roth or IRA from 2017. Here's the $5,000 IRA contribution today after tax. Aggregate them. Now I have 10. And since I want to convert 5 today, well, 5 out of 10 is 50%. So I'm only able to convert 50% of the 5,000 I want to move today from backdoor to Roth. And that means $2,500. So out of the 5,000 after-tax contribution I'm doing today, only $2,500 will be Roth. The remaining $2,500 will be after tax. And my $5,000 IRA contribution from 17 remains pre-tax. Okay, a couple of workarounds. If you have a 401k, you can just roll the pre-tax IRA to a 401k. And this way you have no IRAs remaining. And now you can do a full backdoor Roth IRA of the full 5,000. Otherwise, just keep the pro rata formula in mind because you may not be able to get the full amount in the backdoor to Roth. What about pre-tax? So generally, there's no deduction limits. Well, there's no income limits for pre-tax 401ks if you have no access to a 401k at work. So if you or your spouse have no access to a 401k at work, even if you don't contribute, if you have no access to a 401k at work, you can make pre-tax IRA contributions. There's no income limitations. So that means you technically don't need to do a backdoor Roth. Okay, but if you have access to a 401k at work, okay, there are income limitations on how much you're able to deduct. So if you're single, essentially, and neither spouse is covered by a plan, as I said, you don't need to worry. But if you're married, filed jointly, and you're covered at a plan, not your spouse, essentially, if you make more than $125,000, you can't do a pre-tax deduction. That means the after-tax will be your only way to get money into an IRA other than money through a 401k. If you're married, filed jointly, and your spouse is covered by a plan, then you need to be under 208, essentially. If you're under the 208, you can still do partial deductions. Under 197, you get a full deduction. If you're single and you're covered by a plan, once you make more than $76,000, you can't do a pre-tax IRA contribution. Okay, so then you would have to do the after-tax, convert it to Roth. And if you're married, file separately, and either spouse is covered by a plan, it's only $10,000. Okay, so just something to be aware of. So again, backdoor Roth IRAs only kick in if you make more than 208, can't do a Roth, or if you want to do a pre-tax IRA and you're covered at work, either you or your spouse by a retirement plan, a 401k. There's limitations on what you can deduct, meaning you essentially have to do an after-tax anyways, and now the after-tax backdoor Roth IRA is an option. So again, what you may be saying, well, why would the government care about this? $6,000 or $7,000, who cares, right? Agreed, right? It's not, as I've given this example many times, Elon Musk, Warren Buffett, they could not care less about $6,000 or $7,000. We do, right? Hardworking Americans that want to save a little bit more in their retirement account. We want to save and have the opportunity to put a little bit more into their retirement plan. And it's just bad policy, honestly, that they want to get rid of the backdoor Roth IRA. This comes directly from Senator Wyden, who just has a major issue with Roths. And this is another way of limiting Roths by rich people, since he believes anyone who makes $208,000 married, filed jointly is too rich to do a Roth IRA. So thus, they should be too rich to do a backdoor Roth IRA. It is what it is. As of now, in 2021, it's alive. So you can still do backdoor Roth IRAs. I've done mine. My spouse has done hers. Do it. If your kids work, do it for them. If they make more than the 208, have them do it. If you make less than 208, then do a Roth, right? You can do it. If you don't have access to a 401k at work, max out your IRA. Do it. But the backdoor Roth IRA is a nice little solution to put a little bit more money away into a Roth IRA for you or your family. What happens in 2022? We don't know. I think there's a good chance that a Build Back Better bill in some revised form gets passed with midterms happening next year. God, when you're campaigning, if you're a Democrat, you're certainly going to want something passed, so you can at least hold it up and say, look what I got passed. I got infrastructure. I got this Build Back Better bill. Look at all the stuff I'm getting you. Vote for me again. If they don't get it done, it's going to prove difficult for Democrats. It's going to be a lost opportunity, since the Democrats control the House, the Senate, the presidency. Even though they control the Senate by the slimmest of margins, tiebreaker by the vice president, it's a lost opportunity if they're not able to get the Build Back Better bill done. Now, obviously, inflation was maybe somewhat predictable. Maybe they pushed too hard, right? Maybe they could have done a slimmed down version of this. Senator Manchin said, he told President Biden, this is what I do. It was about 1.8 trillion, and it included a number of things, including raising taxes. But now you have Senator Sinema, and Senator Sinema is someone don't forget about. If you are a retirement account, clearly you're interested in self-directed retirement accounts. If you're watching this video, Senator Sinema, and as well as one other senator, has said that they do not want retirement accounts paying for these policies, okay, or these future programs. Senator Manchin is not big on retirement accounts. This hasn't been his focus. He's more focused on the environmental stuff that's impacting his constituents in West Virginia. Senator Sinema has stated, I think even on the record, that she does not want retirement accounts paying for this bill. So that may be something that potentially could help our industry and help all of you, even if President Biden is able to appease Senator Manchin, if these provisions remain, or if they decide to stick in more IRA provisions. Hopefully Senator Sinema and other senators will step up and say, hey, we're fine with this, but we don't want to use Americans' retirement accounts to pay for this. Let's pay for it with other sources. You want to increase taxes, which again Senator Sinema does. Senator Manchin does not. Let me say that Senator Sinema does not want to increase taxes, and Senator Manchin is okay with it. He was on record saying he's fine repealing the 2017 Trump tax cuts. Senator Sinema does not want to repeal them. So even if Biden can appease Manchin from an IRA retirement account standpoint, Senator Sinema may be our best advocate to step up and say, hey, I'm fine with this bill, but let's remove the retirement provisions. We are still hopeful that these retirement provisions will be removed, all of them, including the IRA, backdoor, mega backdoor Roth 401k. We're confident. We're not, slamming the football down and doing our touchdown dance, right? We're still doing our work. We're still trying to educate a number of senators and explain that, hey, there's some good provisions in this bill. That's fine, but don't use people's retirement accounts to pay for them. In fact, the backdoor Roth IRA and the mega backdoor Roth 401k do not raise any revenue, right? They'll actually decrease revenue because people will be forced to do more pre-tax. So we're hopefully educating senators on that point, that this is actually going to cost revenue. It's just policy, and it's bad policy because it's literally not going to stop people from getting monster IRAs. They have their cap, right? That 10 million cap, whether it stays or not, will stop runaway IRAs. Now you may be asking about the cap. Is that going to stay? Again, we're not sure. Going back to what I said about Senator Sinema and some other senators, they've expressed dismay on using retirement accounts to pay for this stuff. So we shall see. Right now, it's Senator Manchin in the spotlight, and we'll see in 2022. Maybe it'll be Senator Sinema or other moderate Democrat who will step up and say, hey, we like some of these policies, but we're not sure about retirement accounts as a pay-for-play element to this bill. So I would do the backdoor. If you take anything away from this presentation, this video, if you want to do a backdoor Roth IRA, do it now. Don't wait until next year. If you do it in 2022, IRA Financial, we will process it. We may have to unwind it, but our policy is if the law has not changed, the Build Back Better bill has not been passed. If you do a backdoor Roth IRA in 2022, whether it's January, February, anytime before the bill gets passed, we will accept it. We will do it for you. Okay, so don't worry if you miss it 12/31. Technically, you have until April 15th, but no one knows what's going to happen next year. Our insiders are telling us from an industry standpoint that if this bill does not get passed before February or March next year, it's more likely than not that even if the IRA provisions are included, the deadline will be moved from 12/31/21 to 12/31/22. That's for the backdoor Roth IRA. That's for the mega backdoor Roth 401k. That also will push the Roth conversion deadline from 2031 to 2032. And then obviously the 10 million cap will be pushed up a year as well. That's generally if they're not going to get the bill done in January or sometime in February. The longer it goes, the better it is for all of us, because hopefully there is a greater chance that we'll have next year as well to do backdoor Roth. On the flip side, some people in our industry say, well, you know what, if this is going to get done, just let's get it done. I want to know what the bill says. I don't want any risk that the accredited investor provisions or the 10% threshold provisions will come back to life. So, that's another angle as well. I don't think those provisions are coming back anytime soon. Maybe the next time the Democrats control the House, Senate, and presidency, whenever that happens, it's on the shelf, right? That's the risk. Anytime a provision is in a bill and there is a number to that provision, meaning it's going to generate X number of dollars over the next 10 years, it's always a risk that it gets used at some point in the future to pay for something, right? Because it's on the shelf now. Prior to September 15th, it wasn't even alive, right? It was just somewhere. Now it's real, intangible, and on the shelf. So potentially could be used down the road. We hope not. Our industry is going to continue to fight for Americans' retirement accounts, all of our retirement accounts. We've been told this is the way to save. We have a private retirement system, and our money, our savings shouldn't be used to pay for these programs, even if we think they're really good programs. And I have a lot of Democratic friends that are really into, and again, I do believe some of these programs are good. If it wasn't a period of high inflation, providing extra child care, child credit, right? Letting parents go to work so there's money to take care of their kids. It's hard to go against that stuff, right? That's good stuff. We just need to make sure we can pay for it, and there's no abuse. But using people's retirement accounts to pay for it, I think it rubs a lot of people the wrong way. You're never going to have a Republican vote for this. And I think there's enough moderate Democrats, hopefully, that will make sure these provisions stay on the shelf and collect a lot of dust. So there you go. That's kind of it. 2021, Build Back Better is dead. Do your backdoor Roth. If you have a solo 401k, you can do what's called a mega backdoor Roth 401k, which will let you do $58,000 or $64,500 dollar for dollar after tax to Roth, which is a Roth lover's delight. It's really the gold standard for Roth lovers. I wish I could do it. The issue at IRA Financial, with 80 plus employees, there's not enough. It'd be a top heavy issue, because if we've actually scouted this out and surveyed it, and there's not enough rank and file employees that want to do it. And our plan would be top heavy and we'd fail the ERISA test. That's why most 401k plans, even if they offer the mega backdoor Roth 401k, they're not going to satisfy ERISA. So that's why it works really well in the solo plan, where you don't have to satisfy ERISA because there's no non-owner employees. So if you have a solo, if you're self-employed, have a small business with no full-time employees, over 1,000 hours, set up a solo. We can help you set it up this year, and you can do the mega backdoor Roth 401k of $58,000 or $64,500 dollar for dollar. This could be your last chance. Hopefully not. Could be your last chance. And that's it. Let me get to some questions. I'll obviously keep you up to date. I don't think there'll be any updates until second week of January. The Hill is pretty much closed up now for the holidays, Christmas, New Year's. So you're not going to see much activity till probably mid-January. So at that point, I'll probably have some more information. Great news is our industry is really committed to educating members of Congress and the Senate on the importance of diversification, alternative assets, and the importance of encouraging all Americans to save, even through backdoor Roth IRAs and mega backdoor Roth 401k. So we're still holding out hope, I should say, that these provisions will ultimately, all IRA provisions will be removed, but we shall see what happens next year. So let me get to some questions. Again, feel free to ask me any questions you want. I think next week I'm just going to do like open forum FAQs, like kind of very casual, pre-New Year's type, episode. So I'll encourage everyone to just ask me anything you want. Okay, I'll start with the top. Grace, I want to transfer Bitcoin from my Gemini IRA into BlockFi that has Bitcoin. Can I use the same wallet? Well, the issue, Grace, is that IRA Financial and Gemini, when you have a Gemini account, it's in the name of your IRA. BlockFi won't let you open an account in the name of your IRA. We're working with them, but they're not there yet. So the way you'll have to do it, Grace, is you'll have to move your Gemini Bitcoin into an IRA LLC at Gemini, and then from there move it to BlockFi, because we want to maintain the custodial chain of control. So it's got to go through your Gemini IRA to an IRA-owned LLC, generally at Gemini, or if you open one at BlockFi, that could potentially work as well. But it needs to go IRA to IRA LLC, and if you hold it on the BlockFi exchange, that's fine. But remember the McNulty case, possession, and we're working on a solution where people will be able to hold their Bitcoin or Ethereum coins on a cold wallet, where we'll have some responsibility, some chain of control to satisfy the McNulty case, which stated in the case of gold coins, but also potentially for digital assets, that an IRA owner cannot have personal possession of an IRA asset, no unfettered control or command, which for any other asset is not an issue, right? Real estate, notes, private investments. Why? Because there's case law that's clear that you can hold stock certificates or transaction documents in the name of the IRA without violating the prohibited transaction or distribution rules. But digital assets obviously is a new technology, and although it's intangible, you still technically can hold it through a cold wallet, which can bring in that personal possession issue in the McNulty case. So, Grace, I would open an IRA LLC, either Gemini or BlockFi, and then you can move it there. But you're going to want to work with us so we maintain that chain of command. Okay, great presentation as always. Thank you so much. What options do we have to account for capital gains, losses, LIFO, FIFO, any others? Yeah, I mean, this is more of a tax accounting question. Again, if you own cryptos in an IRA, you don't have to worry about capital gains or LIFO or FIFO. LIFO is last in, first out. FIFO is first in, first out. So generally, you're able to select your method. Most people do LIFOs, but you technically can select. I'd work with your account on that. How capital gain harvesting losses work is as follows. There's two types of capital gains losses. There's short-term and there's long-term. Short-term capital gains losses mean you hold the asset less than 12 months. Long-term capital gains losses means you hold the assets 12 months or longer. Generally, short-term can offset short-term, long-term can offset long-term, meaning long-term losses can offset long-term gains. You also have up to $3,000 to use of any capital loss, short-term or long-term, to offset ordinary income. That's something we all should be using. We all have losers. Even if you're just buying cryptos, you probably have one or two coins that you may have lost money on. Maybe not today, but maybe, or I shouldn't say maybe over the long term, but maybe today you're at a loss position, even though you hope you will have a future gain. Sell it now of up to $3,000 and just buy it back. Right now, there's no wash sale rules for cryptos. It's in the Build Back Better Act, which is dead today. So that means you can sell it today and buy back tomorrow. The wash sale rules stop you from doing that 30 days. That applies to stocks, securities. It, as of today, does not apply to cryptos. So that means if you bought Bitcoin at 50 and now it's at 47, sell it, take the $3,000 loss, use that to offset ordinary income on your 1040. It's a win. It's free deduction, and then buy the Bitcoin back tomorrow. Okay. If the Build Back Better Act gets passed, you may have to wait 30 days because of the wash sale rule. So something to keep in mind. That's why it's always good to have a very solid accountant. I'm a big proponent of working with good accountants. Even though I'm a tax lawyer, I work with a bunch of different accountants. They are experts in tax, not just tax reporting and filing, but also more of the tax deduction, credit type, I would say, elements, which a tax lawyer, even someone like me with a master's in tax law, isn't as up to date on. So we'll get a good accountant. That's my advice. If I open a 2019 Roth IRA in March 2020, and I'm now over 60, well, January 1st, 2024 will be the date I can start making tax-free withdrawals. It's the day you make the contribution, okay? So it's 5 years from the date you make the contribution. That's when the clock tolls. So 5 years from the contribution date. Okay, there's some gibberish here. Such a great presentation. Thank you, Adam. Oh, it's my pleasure. Obviously, I really appreciate you guys spending some time with me. I know, as I mentioned, there's other things to do at 12 Eastern Standard Time. And I know I get a lot more people viewing later on in the day, and that's totally understandable. I've tried to find a good time to do this. I've tried in the past doing it like 5 or 6. It's hit or miss. So I just kind of do it like a lunch and learn, 12 o'clock. Even though I usually don't eat lunch till like 2, I figure it's a good time. So the best part of this is it's on YouTube, so you can watch it anytime you want. So subscribe, because you'll get notified when I go live. And sometimes if there's something dropping, like a new tax bill or a new case or something interesting in the self-directed retirement world, I'll just go live. So if you subscribe, you'll get notification, and you can jump on it and we can chat. So just subscribe. It's free. Why not? Okay, Maureen, I just joined the podcast. I believe you said a few weeks ago that we could ask for some of our funds to be transferred to a decentralized exchange for staking. Yeah, Maureen, you could. Again, the McNulty case makes it a little more difficult now because of the issue of personal possession of an IRA asset. Before McNulty, the only code provision that talked about possession of an IRA asset was 408M, which talked about bullion, gold, silver, palladium, bullion, and coins, which said you can't personally possess it. So there was no guidance on digital asset, because other than a digital asset, you really can't personally possess an IRA asset, right? You can't buy art, which is tangible. What other investments are documented through paper or through something electronic? It's not tangible. Cryptos is a modernized digital type of gold, so it wasn't a lot of guidance. And now this McNulty case, even though it did not talk about digital assets or cryptos, you won't find the word cryptos in the case. It does expand the definition of the personal possession requirement beyond just gold or coins. So it's an important case. So as of now, I would stake on the exchange. I think until we get a dual signature wallet solution, which we're going to have one for Bitcoin and we're going to have one for Ethereum backed coins within a week or so. We're actually, our crypto developers are testing it as we speak. Just stake on the exchange for now. I wouldn't use a DEX now because I'd be worried about the personal possession issue. Okay, thanks. Richard, I have a 401k with after-tax and Roth accounts. Allows me to maximize contribution up to 64.5 over 50. Can I also make after-tax to Roth? Yeah, you could also do both. So again, if you make more than 208, you can do the Backdoor Roth IRA of 6,000 or 7,000 if you're over 50. And you can also do the Mega Backdoor Roth 401k, which has no income limitation of 64.5 if you're over 50. So yes, the answer is, to your question, Richard, is yes. Really appreciate you, Adam. Thank you. I appreciate you guys. Thank you. Merry Christmas. Happy New Year. Happy holidays. Hope everyone's safe. COVID's getting a little crazy. I feel like all my friends in New York and Miami have COVID. So if you have it, hopefully you're doing okay. And the good news is this Omicron seems like it's just a bad cold or flu. None of the people I know are really sick. So that's a good thing. Thank God. Hopefully we're at the end of this thing. It's hard to believe it's only almost been 2 years. Kind of tired of, I was talking to my neighbor yesterday and we're like, what are we going to talk about once this is done? The weather again? Anyways, so I'm ready to talk about the weather. I'm done with this stuff. So anyways, happy holidays. Hope you get to spend it with your family, friends, and just have a really great time. If I do a Roth conversion in 2021, the amount I converted will count towards my income, increase my adjusted gross income? Yes. When you convert pre-tax to Roth, that's a conversion. You still can do it up to 2031, assuming the Build Back Better bill gets passed, which it won't. So you still can do it. It's income. It gets included in your AGI. So if you made 100 grand because you're a employee of Tesla and you convert 50,000 pre-tax to Roth, you have income of 150. If you convert after tax to Roth, it is not taxable. That's the difference between a backdoor Roth IRA and a pre-tax conversion to Roth. Backdoor Roth IRAs are not taxable. Pre-tax conversions are subject to tax. Okay, so just keep that in mind. Okay, if my adjusted gross income becomes over the Roth IRA contribution cap, what will happen when I already did a 7,000 Roth contribution of 2021? Well, that's a great question. Something you should talk to your accountant about. You probably will have to recharacterize as an after tax and convert it to Roth. So you basically, if you're still in 2021, you can still recharacterize it. But if there's earnings on that income, you'd have to technically take it out and pay tax. You're right. It's a mess. That's why it's so annoying that there's income limitations on on this stuff. But it's the way it is. Roth contributions have income limitations of 208. It's 214 next year if you're married, filed jointly. It's a very good question. So you do the conversion. Now your AGI goes above that 208 or 214. You basically can't do a Roth anymore. You have to recharacterize that to an after-tax, convert it to Roth. It's kind of clunky, but it happens. So I guess you should have taken that into account. I guess you need to have, you needed to be able to look into the future. But yeah, that stuff does happen, believe it or not. Going back to that 5-year rule for withdrawals for Roth IRA, what about any passive income generated from the real estate investment? Untouchable for 5 years? Yeah. Generally, Stephen, yeah, the income's untouchable for 5 years and 59.5. If you make a Roth contribution, Stephen, you can pull out the contribution anytime, not conversions. Roth conversions, you need to wait 5 years if you're under 59.5. If you're over 59.5 and you do a conversion, pre-tax to Roth, you can pull the converted amount anytime out. But Stephen, earnings are still subject to the 5-year rule. If you do contributions, right, a contribution is money from your pocket or your income into a Roth. Conversions are pre-tax to Roth. That's the difference. Contributions you can pull out anytime you want. Earnings on those contributions, you need to wait till you're 59.5. Roth open 5 years. If you convert and you're under 59.5, you got to wait 5 years to pull the contribution amount out tax-free. If you're over 59.5, you can pull the converted amount out tax-free. Earnings are always subject to 5 years and 59.5. So thanks for the question. And FYI, your IRA Financial crew provides great customer service. I'm a new client. Thanks, Stephen. Really appreciate that. We try. We got 80 plus amazing people all over the country, and really appreciate it. It's appreciated that your kind words. So thank you. We try. We really do care. And again, if you do have questions or issues on our customer service or anything, let us know. You can email me. You can hit me up on LinkedIn. I get a bunch of comments on LinkedIn all the time, and it's good or bad. Sometimes you do things bad. That's okay. You need to, well, it's not okay, but you need to fix them. So if people don't tell you constructively, at least, how you can improve, then you can never improve. So if anyone does have something negative about me, the business, things that we can do better, I'm all ears, right? That's how you get better, is through some criticism. So, but I do appreciate the kind words, Stephen. Thank you. So is there time to do a backdoor Roth now electronically? Yeah, Patrick, you can do it now. Don't worry. You have plenty of time. We can get your IRA account open in a day, and you can do this year. Again, Build Back Better is not happening this year. So even if you don't make the contributions until early 2022, more likely than not, they're not going to retroactively apply the Build Back Better Act to 21. So you're probably going to be okay for 2022. Anyways, I'm still holding out hope that these provisions get knocked out. Hopefully Senator Sinema or another senator will step up once they have a chance to kind of look at all these provisions again, come back in the new year and say, hey, it's unfair to basically pay for these provisions with people's hard-earned retirement funds. That's just unfair. So hopefully they don't touch any of the retirement accounts. The retirement system works. It needs to be better. We need more people participating, but you're not going to get more people participating in the system if you start changing the rules on us and forcing us to lose confidence in the system, that's not going to help anyone. So unfortunately, there is Democrats that are on the left, the far left, that are seeing retirement accounts and Roths as a progressive position. And that's why they wanted to put the 10-year window in for Roth conversions. They want to stick it in there that they're against it, but they know it brings in money. That's why they're stopping the backdoor Roth IRA. That's why they're trying to put all these provisions in there to make it harder for people to save, at least through alternative assets in a retirement account. Essentially, they just want everyone to have small retirement accounts for some reason. I don't know why. $6,000 or $7,000 extra in a backdoor Roth IRA. What's that going to get us, right? Maybe a few $100,000, maybe $1 million if you do it for the next 30, 40 years, not 10 or 50 million. So it's unfortunately targeting us hardworking Americans. We're not billionaires, right? I don't have a private jet. I don't have a chateau. We're hardworking Americans. We just trying to get by, trying to build a business, trying to put food on the table, trying to help our families, help our kids go to school, help our kids buy a home. That $6,000 or $7,000, or even that $4,000 or $5,000, that all is there for our families. It's not going to be used by us to buy a Rolls Royce. So I think Senator Wyden, if I was able to talk to him, I would try to explain to him that what you're trying to do and go after Peter Thiel and some of these other guys, that's not us. That's not the retirement system. That's not the people doing backdoor Roth IRAs. So if you can arrange that meeting, his son actually lives in Miami. I've been trying to reach out to his son. So if anyone knows Adam Wyden, I would love to talk to him because he's actually, believe it or not, you may have heard this, but he disagrees strongly with his father's positions on taxation, retirement accounts, his focus and an obsession with Peter Thiel and some of these other. He has a hedge fund, believe it or not. So he's kind of in our camp, but I would love to chat with him and kind of get his thoughts. So let's go to the next question. Is the backdoor conversion tax owed April 15th? So again, Patrick, when you do a backdoor Roth IRA, there's no tax. There's only tax when you do a Roth conversion, which means pre-tax to Roth. Conversions, pre-tax to Roth, can be done. There's no limitation. There is a 2031 window, but that's probably never going to happen. So you can convert, and this, Patrick, it's a great question because I get this question 10 times a day from all walks of people. Backdoor Roths is after tax to Roth. There's no tax. That may be stopped, or at least was attempted to be stopped 12/31/21, may be stopped in 2022. We'll see what happens next year. Pre-tax conversions are subject to tax and can be done. So, and tax will be due April 15th on the pre-tax to Roth, not the backdoor. What do you mean backdoor Roth conversion? Doesn't count towards the AGI? I'm confused. No. So I'm gonna make this point again, and again, I'm sorry if I haven't been clear enough. Let me start again. A backdoor Roth IRA is when you make too much money, so you can't do a Roth IRA, or you can't do a pre-tax IRA because you have access to a 401k at work. So you want to put a little bit more money in your IRA. The backdoor Roth IRA is the only way you can do it. Backdoor Roth IRA means you make after-tax contributions, not pre-tax, after-tax IRA contributions, and then you convert them to Roth. That is not a taxable event. Why? Because it's after-tax to Roth. Not taxable. Okay? So there's no tax to be paid. A Roth conversion, if I have a pre-tax IRA that I set up in 2015 for 20 grand and now it's worth 40, and that's $40,000 in pre-tax IRA, if I convert that to Roth, I will pay tax on $40,000. That is a taxable event, and that will adjust your adjusted gross income. That is different from a backdoor Roth IRA where I'm converting after tax funds. In a Roth conversion, you're converting pre-tax funds, okay? So make sure you understand that distinction. Is it better to do a 403 Roth IRA or do a Roth conversion in 2022? Well, a Roth IRA, a 403B is a retirement plan generally for public employees, like government employees, state employees. So you may be able to do a Roth contribution to a 403B, but that's not an IRA. If you have access to a 403b and you make over the 208,000 this year, you won't be able to do a Roth. You're going to have to do a backdoor Roth IRA. Tom, I don't know that I understand backdoor pro rata. If I want to backdoor 6K and have 100K in a pre-tax IRA at 24% tax rate, does it make sense? Okay, so I'm not going to be able to do your numbers now, Tom, but this is the way it works. So if you want to do a backdoor Roth IRA, the 6, what you would do is you'd add 124 and 6 equals 130. You divide 6 divided by 130, and that percentage times $6,000 will be converted to Roth. The remaining amount of that 6K will stay after tax. Okay, so you'd have to keep doing it over and over and over to get the full amount of that 6K into Roth. The 124 is pre-tax. If you want to get that to Roth, Tom, you got to pay tax on that 124. Whereas the 6 is after tax. Okay, so you can get the 6 into Roth by doing the backdoor, but again, there's a percentage. If let's say you didn't have that 180, sorry, I said 124. I meant that 180. So let's say you didn't have that 180. Let's say it didn't exist. It was in a 401k. Keep it simple. And you wanted to do a 6K backdoor Roth, you can do it. There's no pro rata issue because you have no IRA. But let's say you now have 180 in an IRA. What you'd have to do is add 180 plus 6 gives you 186. And you divide 6 divided by 186. Take that percentage, multiply that by 6K, and then that amount of 6K will be converted to Roth. The remaining amount of that 6K will stay after tax. Okay, and that's what the pro rata formula is. It only kicks in if you have pre-tax IRAs, not 401ks, pre-tax IRAs. If you have no pre-tax IRAs, no pro rata formula. Can't let these poors become Peter Thiel with their 6K per year. Yeah, Tom, that's it. Senator Wyden thinks it's easy to turn 6K into billions. It's not easy. If there was, there'd be more than 500 Americans with 25 million in a retirement account. Right? That's all I have to say. So this is just an obsessive compulsive disorder by Senator Wyden and some of his team members that think rich people cheat the system, and we all are gathering around, smoking cigars, drinking champagne, eating caviar, and laughing at the government how much money we have in Roth IRAs. It's not that easy, right? Trust me, I'm a tax lawyer. Most of the stuff I buy in my Roth IRA goes down. Other than cryptos and some stocks, like I've had lots of losers. Okay, so my $6,000 I put in over the last 7-8 years, it's not billions of dollars. It's probably not even worth more than I would have been able to do if I just bought an S&P 500. So it's not so easy. Dave, for backdoor Roths, there is no additional tax. Right. The initial after-tax contribution to the traditional is made with money. You're already ready to pay tax. Exactly. Thank you. You're 100% right, Dave. Well said. Gene, do you expect individual income tax rates to increase in 2022? I do not. Why? Senator Sinema of Arizona said she will not vote for it. Okay. It was in the Black Better bill. There was a attempt to increase highest tax rates, capital gains tax, trust tax rates. Senator Sinema voted against it. And from what I'm hearing, she's also against using retirement accounts to pay for this. So maybe she'll get another crack at that. She was also against the accredited investor provisions and that 10% ownership threshold provision. So I don't think rates will go up in 2022 because Senator Sinema. Now, if the Democrats somehow get greater control of the Senate, which I don't think they will, and they can get things done without Sinema, then yeah, because Manchin is in favor of higher tax rates and actually is okay with eliminating the 2017 Trump tax cut. So I think we're good in 2022, and I think the Republicans will probably take the Senate or will take the House. So I think there'll be a divided government, and it seems based off the trends that things are trending in the Republican way. So I'm not sure tax rates will go up in the near future. Thanks for your help. Appreciate it. Well, thanks, Tom, for sticking around and spending some time with me. Okay, I think this is the last question. Looks that way. If I have traditional rollover IRA and I convert part of that to Roth, is the Roth conversion or is that a backdoor? So that's a Roth conversion. If you have a traditional rollover, which is generally pre-tax, that is a pre-tax conversion, which is subject to tax based off the cash or the fair market value amount of the asset. Okay. An after-tax IRA is a traditional contribution that you're not taking a deduction for. Why? Because you want to do Roth and you make more than 208, married filed jointly, or you want to do a pre-tax IRA contribution, but you have access to a 401k at work, or so does your spouse, and then you're basically exempted out because of the income limitations. So in order to put more into an IRA, you want to do a backdoor Roth. If the backdoor Roth IRA provision is eliminated and you make more than 208,000 or 214 next year, and you have access to a 401k at work, we're not going to be able to do IRA contributions ever again. Doesn't that suck? So let me say that again. If you make more than 214 next year, you can't do a Roth. If the backdoor Roth IRA is eliminated, if you have access to a 401k at work and you make more than, if you're married filed jointly, more than the income limitations, which I will repeat again because they're kind of confusing. So if you're married filed jointly and you're covered by a plan at work, if you make more than 125, you can't do an IRA contribution. Okay. And if the backdoor Roth IRA is dead, that means you're out of luck. No more IRA contributions for you. So all you'll be able to do is to max out your 401k. That's going to be your maximum. Now, if you're married filed jointly and your spouse has access to a 401k at work and you don't, then if you make more than 207, there's no deduction. Okay. Then those numbers will go up to 214 next year. So that's why the backdoor Roth IRA is so important, because it gives us, or again, it's not just rich people, right? It's people that, if you're married, filed jointly, and you make more than 125, you're doing well, right? You're making six figures. You're not loaded, right? You're not taking private jets. You're not rich. You're not Peter Thiel. The backdoor Roth IRA is another way to sock away a little bit more money. Now, it's not just $6,000 or $7,000. It may just be $2,000 or $1,500. Why stop that? That's what is happening. For some reason, I'm not sure they understand this provision. Honestly, I don't think Senator Wyden, Congressman Neal of Massachusetts, who's the head of the Ways and Means, I don't think he understands this. I don't, and Senator Wyden is a tax lawyer. He has a tax background. I don't think they truly understand this. And if they do, that's even worse, because what they're saying is, we don't want anyone having retirement accounts. Anyone that has a little bit of money, we want to keep you poor and your family's poor, which is too bad and is sickening, because 125 grand is good. But if you're married filed jointly, that means two people are averaging about 60 grand a year. That's money. Hardworking Americans, nothing wrong with that. You're not rich, right? Those people like us, we could use every dollar we can put away in an IRA. That can help us, can help our kids and their families in the future. So eliminating that is basically eliminating our ability to provide more for our families. Why? Because the retirement system is the most effective way to save. Because of deferral, compounded return, it's the most effective tax advantageous way to save. And by stopping us from putting away a little bit more money into an IRA, they're preventing us from growing that nest egg, which is too bad. So that's why I'm so focused on the backdoor Roth 401k. Our industry is fighting for this. There just doesn't seem to be a lot of momentum. Not a lot of senators understand this stuff or care. They're focused on some of the bigger stuff. And again, we don't want to be totally ungrateful for knocking the accredited investor and the 10% provisions out, because that was certainly our priority. But the backdoor Roth IRA is more of a priority for all Americans. And that's why it's surprising and damaging for all of us, because, again, make more than 214 next year. If you make more than 214 married filed jointly and your spouse has access to a 401k, you will never be able to do an IRA again. All you're going to be able to do is a 401k. So that extra money you want to put away, you're going to lose out. So that's why I'm so frustrated. Okay, that's the last question. Isn't all my 401k, 403b pre-tax, joint married makes less than 215? So can I do a backdoor Roth conversion of those 401ks? Okay, let me explain this. I don't want to mispronounce your name. B. I'll call you B. Okay, B. A 401k is not an IRA. So 401k, 403 is not an IRA. So if you have a 401k or 403b, you may be able to do elective deferrals of 19.5 or 26 and pre-tax or Roth. Now, if you make less than 215 or 208 this year, married, file jointly, then you can do a backdoor Roth IRA, meaning you can take $6,000 or $7,000 if you're over 50 from your pocket, your money, not from your 401k, just your cash, your savings. Okay, I'm trying to pull a dollar out of my pocket. I don't even have it. I think I have one. And you can do a backdoor Roth IRA and get that into Roth. Okay, that's not 401k money. That's personal savings that you can do. But if you make more than 208 this year, right, you can't do the Roth, so you can do the backdoor. It's not a 401k contribution. It's an IRA contribution. However, if the Build Back Better bill gets passed next year and there's no more backdoor Roth IRAs, then B, all you're going to be able to do is 401k or 403b contributions if you make more than the 214. If you make less, then you'll be able to do a Roth. The backdoor Roth will be dead, but you can still do a Roth. You're not going to be able to do a pre-tax IRA because you make more than, well, if you make less than 215, you may be able to do a pre-tax IRA. Depends on your income level. But you're not going to be able to do an after-tax to Roth. So the issue again is who suffers by this provision. In the Roth world, anyone makes more than 214 next year. And in the pre-tax IRA world, anyone who has access to a 401k that makes more than either 214 or 120, 129 if you're covered by a plan, 214 if your spouse is covered by a plan. You're going to lose next year if the backdoor Roth IRA gets removed. Okay, what is your deadline for pre-tax IRAs to Roth conversions? 12/31. If I transfer the money in 2022, can I apply to tax year 21? No. You got to convert by 12/31, excuse me. IRA contributions can go up until April 15th. Conversions for the 21 taxable year must be done by 12/31. So you got to elect to do that. So you got another, 8-9 days. Okay. Again, I know it's confusing, and I'm trying to do my best, and I'm sorry if I'm not being more clear. I happily, if you're still confused, reach out to me. I will talk to you individually, one-on-one, whether you're a client or not. I don't care. Backdoor Roth IRAs are conversions of after-tax funds. They're not taxable. Pre-tax to Roth are taxable. Those need to be done by 12/31. The after-tax to Roth could be done essentially anytime you want, right? Because it's not taxable. The contribution needs to be done by April 15th for 21, but the conversion should be done right after, so you don't have any income on that contribution. Because if there's income on that contribution, you have to pay tax on the income associated with that contribution. So that's why the backdoor Roth IRA, you deposit it today, you convert it tomorrow. So there's no earnings. Thank you. Happy holidays to everyone. Can you do backdoor Roth if you have an inherited IRA? No, inherited IRAs are stuck. You can't do anything with them, Gary. It's a great question. You can't do Roth conversions with inherited. You're stuck. So that's a great question. Well, let's end on that. Happy holidays, everyone. Merry Christmas. I'll talk to everyone again before New Year's. Next week, I think I'm just going to do like an open forum. So just fire away, send questions, or hop on next week, and I'll answer anything you want involving retirement accounts. If you want life advice or life lessons, probably I'm not the best person. Okay, I guess one more from Esther. Opened our new Roth in 2020. Convert it this year. Well, if you do a Roth, I don't know if you need to convert it. It's already a Roth. But anyways, will the earnings be taxable? Okay, if you started a Roth today, okay, I understand. Okay, you start a Roth today, you have 5 years. So anytime you start a Roth, there's a clock of 5 years. It doesn't have to be per Roth account. It's any Roth. So if you're 18 years old and you open a Roth IRA and put $1 in it, your 5-year clock will start from that day. In order to pull everything out tax-free, Esther, you got to be over the age of 59 and a half, and plus the Roth IRA must be open at least 5 years. If you don't meet both those requirements, your earnings are going to be subject to tax and 10% penalty. Okay, so you need to wait 5 years plus the 59 and a half. Contributions you can always take out anytime you want, but the earnings, 5 years plus 59 and a half in order to get a qualified Roth distribution. So all the distributions are tax-free. And on that note, that's it. So thanks for spending some time with me. Had a great time. Happy holidays. Merry Christmas. And look forward to speaking again with everyone next week. Be safe and have a wonderful holiday.